Good day everyone, Alice here from Vancouver Financial Network. Today we are talking about the technology stocks as we are getting into the kind of like a big correction in technology stocks, and everyone's saying that hedge fund managers are selling their stocks just due to bond yield is rising, interest rate is going to rise, so technology is not a safe play, and we're gonna sell our stocks there. So let's look at some of the charts for technology stocks. See where are we at. Here is the Facebook, which is Meta platform. This is weekly chart, and as you see here is the last buying level for me for the Facebook, but I'm not sure if you're getting there, as we are into a kind of like a choppy and sloppy in daily chart. Let's look at the daily chart, and we are kind of getting to the oversold area. But here is the thing. This formation is kind of like very similar to the head and shoulder pattern, but I'm not sure if this is triggered just because we are getting to the similarity of the head and shoulder pattern. It doesn't mean that we are gonna trigger that one. But if it trigger, so we are going to test again 291 to 302 or 313. That's going to be a buying level for the daily chart. But again, there are lots of resistance upside there. As you see, all the moving averages are sitting along each other from 334 all the way up to 344. So that is going to be a massive resistance for Facebook. But downside again is going to be limited. If you go again to the weekly chart and you're saying probably we are at the end of the wave 5, which is going to be 1, 2, 3, 4, and then 5. So it's going to be ABC correction, and if you don't count like this one, 1A and B and C, probably you're going to take this one is 1A and this one is B, and then C is coming down the road, probably ended up to here because C doesn't need to go below wave 4, and that's how we are looking at. So again, Facebook, I'm not looking for more downside to it, just because here is the thing. If you look at the Facebook during COVID crash, here is the COVID crash. You see, just barely going to like for how many days? 1, 2, 3 days below 20 SMA on the weekly chart. 200 SMA on the weekly chart, and that's it. So 3 weeks, and then that's it. So we are still far away from 200 moving average. But again, everything is possible. Don't get me wrong, everything is possible. We can go down there, but for now, chart doesn't look like we are getting all the way down to here. But if we are getting to the nasty bloody market, we can test that one as well. But for now, I'm looking for a buying opportunity around here, as we are into a bullish momentum still. This is a correction. This is undervalued right now based on the fundamental analysis. So I'm not looking for more downside. And if there is any downside, I'm looking for kind of like a discount in the price. Next chart is going to be Amazon. Amazon, we have very, very choppy and sloppy since July 2020, as we are getting into above 3,000 area, and everyone's talking about 4,000, 5,000 Amazon or something like that. But whenever we are getting above 3,600, just price going up and then coming down sharply, and now we are getting back again below 3,300, which is kind of again going to the undervalued situation. And whenever we are getting to that one, this price is kind of like undervalued, and institution is coming back and helping Amazon to just going higher. However, if it breaks through this trend line, if we close one daily candle below 3,200, then probably we are going down all the way down to here. So 2,700 to 2,900, that's going to be a fair possibility for Amazon to have like a very, very solid breakout, especially here in the wide range bar. So again, this area is pretty important for Amazon as well. And if you're going down here to the Microsoft, the next one, which is my favorite one, Microsoft, again, we are just taking out this low with the doji bar here. Again, I'm not sure if you are getting a bounce from here or not, but definitely this is not a strong price action. This is the pattern of the weakness. And Microsoft, if we can't get any bounce from 302, I believe Microsoft it's going to test 20 SMA on the daily chart. And if you are not looking my day analysis, like a weekly analysis for stock market, just go to our channel, go for it, and take a look at it, because it gives you insight why I'm looking for all stocks, all the tech stocks going down to pretty sharply. Probably we are halfway of the correction, and we are going to complete our correction somewhere around here. Microsoft is going to be one of them, just because here is the one range bar, fantastic breakout to the upside, 200 moving average here. And if you look at the COVID crash, we're just going down and mimicking the price here just below 200 moving average, and then going all the way back up there. And here again 2018, exactly the same scenario. So based on the chart, Microsoft gives us very good buying opportunity if it goes down there. So again, this time is not going to be exception. This time is going to be the same scenario. I don't know if it's going to be tapering or a bond yield rising or anything like that. Again, I don't care. I'm gonna just buy Microsoft when we are getting to that level as well. Here is the Apple. Apple is pretty overvalued. Let's go to a daily chart, because I'm gonna show you something. Apple T is holding up pretty well there, but this pattern, I believe, if you compare it to Microsoft, Amazon, or something like that, this one is holding up pretty well, but it's gonna smash down. I believe Apple is gonna trigger the bear market, at least for now, if we are getting into a massive correction to Apple. So you can see Microsoft is holding up pretty well, Amazon is holding up pretty well, but Apple can go to bear market at least for 2-3 months if we are taking out this pivot low. And this is very important, like 168 on the Fibonacci level as well. It is very important. If you're taking out this, I don't care if you have like a 50 SMA or this, in this area we're gonna get bounce, but ultimately I'm looking for Apple going all the way down to 146 to 150. So still we have 20 points from that high, but this can go down and even lower if you're taking out. But here we have got lots of support here, which I believe Apple is going to test down. Whenever we have that type of consolidation and breakout, Apple goes down to test that consolidation level and find the bottom to have another rally. Again, look at this. This is sharply higher going down, and then sharply higher going down, and lots of volatility inside the Apple before this rally. Okay, so I'm saying we didn't test 200 SMA on the Apple on the daily, so I think it's the time, just because time to time here is the COVID crash, here's the last May, and then this time probably it's going to be Apple turn to touch the 200 SMA on the daily chart, which is going to be 145 to 150. Another one is Alphabet or Google. Let's talk about this one. This is pretty interesting. Alphabet or Google, it's kind of like the same pattern like Amazon. Since August 2021, it is in kind of like a choppy consolidation, still holding above 2700, which is pretty important level, and also 2660, which is very important level on the weekly chart. But if you're going to the daily chart, I'm gonna show you something interesting. If you're going to the daily chart, here is the level that I'm looking for Google. Like this area and this area is kind of like very important for Google. If you're getting there, I believe that's going to be a good opportunity, especially this one is 200 SMA on the daily chart. All right, so 25, which is 2600, till 2659, which is 2660, that is going to be good level. And today Google just closed below 150 SMA. That is very important. Still we are above this pivot, and this pivot is very important as well. So if we are getting down there, I'm not gonna surprise myself like, okay, we are getting to the bear market or something. This is going to be a nice opportunity to buy Google as well. All right, so keep it in mind. And the next one, which is last one, is going to be Nvidia. Everyone's talking about this stock. This stock is like Apple, holding up pretty well, but look at the pattern. Lots of lower high, and lower high seems like we are getting, if we take out this pivot, why this pivot is important, just because this is going to be 50% Fibonacci, this pivot. And also look at this wide range bar just keep the Nvidia in a bullish run. And if we take out this, it's gonna take too much energy, lots of energy to break down. So if we break down, I think ultimately we are going down there, and below 220 Nvidia is going to be a good buying opportunity. We are still 50 points away from that one, but that can happen. So I'm not gonna rule that one out if we are not getting down to sub 220 for Nvidia. Okay, so here is my analysis for the tech stocks. If you like our channel, please give us thumbs up. Please like the video. If you like if you want to have any comments, please just put your comments in the chat box down there. And if you like to see more insights during the week, just come to our Telegram channel, which is Vancouver Financial Network. There are tons of good materials there. You're gonna enjoy it, and you're gonna just take a benefit, and it's all free. Okay, have a good one. See you guys. Take care. Bye.